The popular micro-investing app, Raiz, formerly known as Acorns, makes investing easy. Like any investment, though, you need to understand the tax implications of any gains you make. In short, yes, you will need to report your Raiz gains to the Australian Taxation Office, ATO. Anytime you sell an investment for more than you bought it for, that's a capital gain. Raiz often involves buying and selling units frequently, particularly when you withdraw money or when the app rebalances your portfolio. Each of these sales can result in a capital gain or loss. You are required to report all these transactions in your tax return. Furthermore, any dividends you receive from the underlying investments in your Raiz portfolio, whether paid in cash or automatically reinvested, also need to be reported as income. This includes any attached franking credits. Thankfully, Raiz provides an annual tax statement that makes this process manageable. This comprehensive document details all the necessary figures, your total capital gains and losses, dividend income, and franking credits for the financial year. You should receive this statement well before the tax return deadline. It's crucial that you use the figures directly from this statement when lodging your tax return to ensure accuracy. Don't rely on your own summary of transactions. The official tax statement is what the ATO expects. A significant benefit to remember is the 50% capital gains tax, CGT, discount. If you've held your Raiz investment for more than 12 months before it was sold, you may be eligible to reduce the taxable portion of that capital gain by half. Raiz tax statement will typically calculate this discount for you, simplifying the reporting process. Keep all your tax statements and records for at least 5 years in case the ATO ever audits your return. If you're unsure about any aspect, consulting a registered tax agent is always the safest course of action.